Hello, welcome to McBoss Capital channel. My name is Michael Chu. This is a US market recap video for the week ending October 31st, 2025. So we have officially ended October. Here's a monthly chart of the Nasdaq Composite Index. We are actually up since April from this bounce here. And right now we are finished October. And obviously we have hit new high recently. And this is 7 months this is a 7 months rally right now, so it's quite a little bit lengthy. In the past, you can see if you go back many years, there are some times where it can go on for a while, but usually there is some month that it will kind of red, right? Red months. But in this case, I said 7 months is pretty strong. So I'm not sure we're near the end of this rally with a potential for a pullback or something. In November, we'll see. On the weekly chart, we are 30 weeks up right now. So again, very strong rally since April, just past the 7 months mark, and we had a huge gap up this week in the beginning of week, but it did close near the bottom of the range. Doesn't look as bad on this chart. Going to the daily, so we gap up right here on Monday, and then we climb to Wednesday, but Thursday we have a big drop, and that looks like distribution day right there. And then on Friday, we did bounce back a little bit, but again, we closed at the bottom of the range, so not ideal. So nonetheless, though, we did, because of Monday's gap up, it really pushed this green line, which is the short-term 10-day moving average, at a sharper slope, and you can see that right now. And right now this uptrend looks really strong. So if we were to follow this trend line, we would have a very strong rally, especially if it does bounce the coming week. So that's something to watch for. Obviously the opposite could happen too, where it kind of fall, to the short-term moving average, the green line, and then even test the 21-day, which is this slope right here, the pink line. So that's also possible. So something to watch out for in coming week. We're still in the midst of earnings season, so anything can happen. Especially even though we just blew past, like, five mega cap tech earnings this week, but there's still a lot of growth stocks hasn't reported yet. So the next 2 weeks will be a whole bunch of them will be reporting. So that will move a lot of growth stocks as well. So here's the equal weight Nasdaq 100. It did make a high at the beginning of week, but you can see it did close down for the week. So slightly different. And this one, you after it gap up on Monday, it kind of run out of gas pretty quick. Tuesday and Wednesday it didn't go up much, and then Thursday we have that drop, and Friday the bounce back, kind of weak. And right now we're just sitting at the 10-day. It still looks okay, because we if this is the support level we found, then we hope that it will bounce like this. So again, that's something we want to watch for. Breadth is very important to the market. If we don't see enough breadth, usually it could slowly bring the market down, right? If breadth continue to weaken. So something we want to watch out for. You can see that from the relative strength line here as well. It just has dropped, quite significantly in this last week or so. So again, not an ideal sign, but let's see if this would change. Right now we're just sitting at near the 10-day line, and we hope that it can find support here. So S&P 500 monthly chart, again we see a very similar bounce from the April low here, and from there we have this nice 6 months rally since then, so it looks really good. Here's the weekly chart, also seeing a strong rally. We did make a new high again this week, but we did close at the bottom of the range. Here's the daily chart. We also see a nice gap up on Monday, and then Tuesday we continue. Wednesday is starting to reverse, and Thursday we have a down day here, and Friday we have a slight bounce. So again, not a very convincing bounce, but it did stay above the short-term 10-day moving average. So that is the good sign here. And so we draw a trend line on the lower channel line. We do have a pretty strong slope, so we'll see if that can continue on this trend line. If not, then we may come down below 10-day and maybe even test the pink line in this coming week. So that's something to again watch out for. Quick look at the equal weight S&P 500. Here we see that for the week it actually ends lower, and not only that, it actually cross below the red line, and that is the 50-day 10-week moving average. So that is not a good sign. We did come under it recently, but let's go to the daily chart. So again, we see that Monday here we went up, but it really didn't move much. Tuesday we start falling, Wednesday we fall, Thursday we had that pretty bad day here, and Friday we bounce back. But again, we're even though it's at the upper range, but it's still below the 10-day moving average. So here's the 10-day slope right now. So it doesn't look very good. It's a pretty sharp angle down. The other thing that you can see here is that last time we start bouncing on the third day. So first day it was down, second day. By the third day we came back to the 10-day. Right here we are 1, 2, 3 days. So we are third day we are still below all the moving averages here. So this is a little bit concerning. Generally, you want to see a big bounce, right, like a bounce very fast, but we haven't seen a strong bounce yet, even after 3 days now. So there's a likelihood that it can, remain below this level now, and so that is the negative for the broad-based market, and so this is worth noting. The monthly chart, the Dow Jones Industrial, it also have a nice 6 months rally since April. It's pretty good, making new high. On the weekly chart, again, we can see this rally also making new high this week. And on the daily chart, we have this nice gap up on Monday. Tuesday, we continue. Wednesday and Thursday, it starts to pull back. Notice Thursday, it didn't really drop that much compared to S&P and Nasdaq. So that is relatively stronger. You can see it actually came up. And then on Friday, it was holding pretty good, and it was able to close in the upper range. So that looks pretty good. So overall, Dow Jones looks the strongest. Again, you can see the 10-day line pretty high, still much below the current price. And then we draw a trend line at the bottom. This is a very strong slope. This is more than 45-degree angle. So if we continue this trend, this will be a very bullish market for Dow Jones Industrials. So looking at the Russell monthly chart, very similar. Since April, we have at least 6 months rally. Here's Russell on the weekly chart, also very strong. It didn't close positive for the week, so that is negative. So on Monday, we went up. It didn't really close strong. Then Tuesday, we start to fall. Wednesday, we went down pretty hard actually on Russell. And Thursday, we closed below the 21-day line, the pink line right here. And then by Friday, we were able to bounce back to the 10-day. So we are technically under this pretty steep downtrend line right now. Of course, we have seen this many times recently, so it's nothing new. The question is, can we bounce back from here? So that's something we need to watch out for this coming week. And the red line here is still a very steep angle. Right? This is the 50 days moving average, so this is still a very strong slope. So maybe this recent kind of consolidation here, digestion here, can give it more room to run, like at a sharper angle like this right here. So it is possible. So we'll see if that happens. So it can maybe accelerate in the run again, Russell. But again, we'll see. But it didn't do as well this way, even with the Fed rate cutting another quarter point. So of course, the Fed also say December rate cut is not 100% certain. So that's why it pours some cold water into the Russell index, because most small caps depend on interest rate more. Next, we're going to look at this New York advanced decline line here from the IB newspaper. So down here we have the index up here, but down here you can see how the advanced decline line for NYSE, it went up slightly on Monday, but it came down Tuesday, Wednesday, Thursday pretty hard, and then Friday we see a very subtle bounce. So again, pretty big drop this week from the advanced decline line here. So that's a little bit troublesome here. And then for Nasdaq, you can see we already reached near the lows here. So another bad sign how the breadth is kind of weakening based on number of stocks up and versus down. So that's also now a good sign. Looking into next week, we have the Institute Supply Manufacturing PMI coming out on Monday. Wednesday, we have the ADP Employment Report for October. And then we have the University of Michigan Consumer Sentiment Index out for November for Friday. So again, we still have the government shutdown, so no unemployment numbers will be out, at least for now. We do have many, again, growth stock earnings coming out: Palantir, Robinhood, Supermicro, Beyond Meat, AMD, Shop, Uber, ANET, Spotify, ARM, Applovin. So here's the innovative IBD 50 ETF on the monthly chart. So we have this huge downturn back in 2022, and then we bottom around October uh, right here, and then we have another bottom here in 2023. So really, growth stocks didn't start moving until later 2023. And then we start to bounce here, and then recently we have this 7-month rally right now, very sharp angle coming back. So that is a very good sign actually. So for growth stocks, here's the weekly chart. Again, we see this huge uptrend here. Looking at the red line here, which is the 10-week moving average. We did have a pretty bad week last week, coming down hard, but we bounced and closed near the top, so that was very bullish. And then Monday we gap up for the week, and we're able to close pretty tight range here. So that looks actually very nice, surprisingly. So here's the week before where we went down pretty hard, and then we start to bounce, and then here we not a big strong Monday compared to the index, but nonetheless it did go up to Wednesday here, pretty close to a new high, 41.25, so just slightly under it. And then we pull back Thursday, which is not too bad, doesn't look too bad on this chart at all. And Friday we actually bounced off the green line. So again, we're seeing good support at this level. That's a really good sign. If we do find support here, then we can draw a trend line here, bottom channel line. It will be very strong slope if that is the case. We bounce off here, but we'll see. We could come down a little bit lower before we bounce. So we could test 10 and 21 day here as well. But we did find support on Friday, so that's a very good sign. Yeah. 10-year yield has bounced back this week as well. We're near 4.1% right now. The US dollar actually gaining strength right now, so that also surprisingly, because Dow Jones actually the strongest index right now from what I can see. So yeah, very surprising. International stocks may get hurt more if US dollar get more bullish, but so far it hasn't dent the Dow Jones as much. And the oil price, yeah, it came back down after a strong week the week before. It's still lingering above the 10 days, so that's still a good sign, but it's definitely finding resistance at this long-term moving average here, the red line and also the black line. So that's 50-day and 200-day. Here's gold. After a big drop the week before, we didn't really see much of bounce. That's the problem here. It definitely looks more like an L-shaped pattern than a V-shaped pattern right now, and that's usually a very negative pattern here because you draw that and it forms a triangle, and that's usually a really bad L-shaped pattern, so more bearish pattern. So unless it passed through this green line here, the short-term moving averages, and was able to hold and close strong, and then fall through the next day, then we might see, hey, maybe that's a true rebound, but we're not there yet. Silver looks very similar chart. Copper came down pretty hard on Thursday, so that wasn't good. It was bouncing back, and looks like it fell on this breakout right there. So that is not good. We're now back to the 10 days. So yeah. Here's a uranium nuclear ETF from Nasdaq. Yeah, it did bounce on Monday, Tuesday, Wednesday. It bounced really strong. Looks like a good V-shaped bounce. Thursday was able to hold. Friday it did give back though, but it's still above the short-term moving average. So this one looks slightly better. And then looking at Bitcoin ETF here from Grayscale, it's not moving much. It came down pretty hard after finding resistance here at this moving averages at this level. So not good sign. So here's the SMH from BYND Semiconductor ETF. Very strong uptrend. Look at this bottom channel line. So we did close in the middle range, but after a pretty big gap up. So again, the chips are still very strong right now. So just one of the strongest leaders here. Here's the daily chart, and yeah, we have a nice gap up right there. We make new high on Wednesday. We reverse from there Thursday and Friday. So Friday it wasn't as strong because it couldn't even close in the positive, but we're still above the 10-day here at this level. And if we find support soon, that'll be a really good action there. Again, if we draw a channel line at the bottom, it's a very strong uptrend right now, close to 45-degree angle. We're looking at NVDA, started very strong since April with this rally, and then we started consolidation the last few couple of months at least, and then You can see here forming a tight base and then another tight base. And then this week we finally came out very strong on the week, high volume. So this is very good sign. Looking at the daily chart again, we'll see this consolidation here and then another one here. And we bounce out right here on Tuesday, very strong. That was a big move right there. And then Wednesday we went up higher. And Thursday and Friday, look at, it didn't really give back much, too much. So that's a good sign. We are of course a little bit extended at this green line here, at this level. But as it comes up, this is the slope. And so we find support and we bounce. That will be a good another good entry point there to either add position and so forth. So AMD, very strong chart. Again, this one found support at the 10-day recently, and then we have this huge bounce. Then we went up more on Wednesday. Thursday we came back down. Friday again, trading very tight. Again, we see this green line here. We draw the slope. It's a very strong slope. So if we find support here and bounce, this could go higher. On the weekly chart, you can see how strong it looks. And this 10-week moving average is just very strong slope right now. AVGO also came out a little bit, but it did close back near the buy point here for the week after this recent consolidation. So very nice little cup base pattern here. And again, we went up Monday to Wednesday, breaking out this nice cup base with slight handle here. And then we kind of pull back on Thursday and Friday. And we're getting close to the 10-day, so we want to see a bounce very soon. Here's Taiwan Semiconductor. Went up very strong since April. Then we formed this consolidation. Then we went up more here, and now it looks like it's just consolidating at this level here. On the daily chart, you can see it better. We found resistance again at the upper channel line, but the bottom channel line is still intact. So we'll see if this can eventually break out again. This is IGV, the software ETF. Again, we've been consolidating quite a bit recently. Hasn't come out yet. This week it was trying to, but it just couldn't. On the daily chart, you can see it more clearly. This is the first base. Came out a little big and then it just started falling again and formed another base. And then we got rejected here this week here on Tuesday and Monday. It couldn't go past it. And then it came back down to basically where the 10-day moving average is right here. So yeah, software is a little bit weaker than the chips, which means you can see from the RS line here has actually been lagging the general index. So first we will look at Microsoft. It did report this week. It wasn't a good response after the report. We came close to the previous high, and but it then fell all the way back down, which is very big movement here. On the daily chart, you can see here Monday, Tuesday was a really nice gap up. Went all the way to the top before closing lower. But Wednesday, it just hold on to that area. Thursday, the news came out with the earnings and it fell, gap down. Friday, it kind of followed through with that news. So not a good sign so far. There's no buyers coming in yet. But we are near the long-term support line, 50-day moving average. So maybe we can see a bounce here. But if not, that'll look very dangerous because we could start to test the 506 and 492 level and even come down to 200. But again, there's still a lot of levels to test if it does come down before going to this black line here. Here's Google weekly chart. Alphabet really has been a spectacular stock. This rally, I mean, you can see this uptrend, and then recently we digested all these gains with a really tight base, and this week again with the earnings and Monday gap up, we really just keep going and we didn't look back. We did give back a little bit on Thursday and on Friday, but not too much. So here's gap up on Thursday. So Monday gap up and then Thursday gap up on the earnings, and Friday we give back very little. It was only down 0.1%. So this green line, which is the short-term moving average, is sloping up like pretty strong right now. Like I mean, this is almost like a 55, 60-degree angle even, and yeah, and so this is starting to show some acceleration in this stock. So not all stocks are doing well. Here's Meta. Reported it was already looking pretty bad because it was below the red line here for like few weeks, and then it tried to come back up to the red line this week, but as the earnings came out, it got tanked, and now it's below the black line. The last time we were below the black line was back in April. close to April. And so this looks really bad on the weekly chart. So on the daily chart, you can see here we have this base here, but it fell, and then we went down lower, close to the 200-day, and we came back up again. Just a few days above it looks good, and then the earnings knocked it down really hard. Not only did it gap down below the black line, so that's very negative, because there's no support whatsoever. And then Friday was even worse because we followed through with the sell-off on Thursday. So again, no buyers are coming in. This is a little bit concerning. We're seeing that in Microsoft, we're seeing that in Meta. These are really big cap guys that a lot of institutions own. Why are they not buying into these stocks? So that spelled a lot of concern, I think, going forward. So maybe we are going to be in a period of consolidation or more selling. So that's something to watch out for. Another stock that did well this week is we had this pretty big consolidation here from Amazon. Two short-term base here side by side. And this week we started out strong, coming back to the right side of this base. And then with the earnings out on Thursday evening, afternoon, Friday we gap out really strong. So that was a really nice move for Amazon, up 10% on Friday. So it did close at the bottom of the range because it's big profit from the top, and but it's still a very strong gap up, especially out of the base here. So this stock is really strong right now. So here's Apple. Again, also very strong earnings season report that propelled it into new highs here. So this one looks really good. So here we go, breakout right here. Then we kind of pull back just slightly to the 10-day. Look at how it got support at the 10-day line right there, and then we bounced, and then earnings came out. It didn't move too much, but it did reverse though. So that's the only negative thing. But it's still above the 10-day line, so it looks really good. So here's Tesla on the weekly chart. We have a recent bounce here, and then we start to went sideways, very tight base. Looks really good, and then now we're starting to close stronger on the week as well. So that looks really good as well. So we're not out yet. Right there is the upper channel line here. So right there. So we'll see. We recently tested the lows here at that level, and we bounce, and then we test the 10-day again, and then we bounce. So we're getting closer and closer to challenging the top here. So at some point, if it works, that will be a good sign. And finally, we had Netflix. Netflix have been going downtrend. Lots of negative news with earnings and so forth, and it came down here. Problem with this chart right now is like we have this sharp down week, and then we have a very minuscule bounce. That's the thing that I don't like. It's starting to look like an L-shaped base. If it doesn't come up within another week or two, like above the black line, we could be in big trouble. So that's something to watch out for. So here's the daily chart again. We draw this L-shaped pattern here. So it's going sideways here, which is not ideal. Usually we like to see a stronger bounce. And now we have this 10 and 21-day slope coming down like this, and we need to surpass this and then find support, and then we still have this red line also coming down, so that's also another possible resistance level. So we'll see what happens over time, because right now we're probably going to be stuck in this range right here, whether we can surpass this right here 1200 level, or whether we're going to go down. So hopefully you guys enjoyed this video. Please like, subscribe. The market has been wobbly the last 2 weeks. It could possibly be wobbly again the next 2 weeks because there's just so many earnings that hasn't reported yet, and so we'll see how the market continues this. If overall it can hold up the next couple of weeks with all these earnings, and growth stocks are still holding up, or at least some of them doing better, we can see potentially a year-end strong rally, right? So that's what we hope to see. But right now it's just been very choppy trying to trade this market, and yeah, unless you're holding a stock that has report good earnings and make those big gains on those strong days, it's pretty hard to trade on the day-to-day, because we have very volatile right now, very choppy. Not too volatile in terms of moving one way or the other, but just very choppy. So thank you all for watching, and I'll be coming out with a growth stocks list, and there's going to be some new names that have reported and show up on my new list, so we'll look at that. Thank you.